Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from beautiful, sunny Denver, Colorado. Today, I am pleased to be joined by my friend, Mr. Scott Durfee, Senior Manager of Trader Education. Durf, it's great to see you on a Monday, bud. How you doing?
Going good, man. Beautiful day on this side of the slope here in Orem, Utah as well. I'm right here at the shadow of Mount Timpanogos. We got a little bit of snow last week. It's beautiful, but we need more. So send all you can.
If only I had the impact, Scott. Obviously, I'd be looking to help out. Seems like that's one of the key things about our high desert area up
Yeah,
here is one thing
yeah.
we could use is a fair bit of moisture. We're just not getting it. You know what? We had a fantastic finish to last week. We've rounded out the week, the first day of May with National Investing Day. We had a full day of some awesome content. I'm going to show you all ways to find that stuff here momentarily, but just wanted to bring out that there are replays available for all of you. I'll show that here on the channel momentarily. You should all know we're joined by Brent Moores in the chat this morning, so Brent will get to comments and questions that Durf and I are unable to get to, but we want to hear from you nonetheless. So please feel free to post in there for the duration of the show. We will go about 45 minutes. By the way, make sure you're following the three of us on X. We're all available there for you. If you're not doing so, we try to give you insights from the market, charts from the market, things to keep an eye on throughout the week. So love to have a follow from you there. Now, with that stated, let's get to our disclosures and we'll move into the discussion. So first of all, remember everything we cover for you today should be considered informational and educational exclusively. We do not make recommendations nor endorsements for any approach to trading the market here. What we will do, however, is utilize technical analysis as we review the areas of the market here. Remember to consider technical analysis one of your decision-making puzzle pieces, not the entirety of it. And we discourage you from basing your decisions exclusively off what you get in the way of technical analysis. As far as our agenda is concerned, we will follow the standard detail here today. So we'll start with our broadest indices, make sure we touch on some key areas of the market. You know, we're going to look at oil, of course, and work our way through sectors on the move and stocks in the news. Now, before we get to it all, as I mentioned, I wanted to highlight where you can find the replay availability for everything we offered up for you last week. So going into our calendar here, just wanted to highlight you can use the calendar under schwab.com/coaching to find this stuff. But if you go back to the first week here, the last week of April, I guess as it is, National Investing Day is right here. But as far as watching the replays are concerned, the easiest way I found to do this is just to come to our playlists page on the channel. So the Trader Talks channel right here. We got two things to highlight. Number one, Scott and our friend Ray Kimbrell, they did the virtual workshop last week as well. So we've got the technical analysis workshop, the full playlist for you, Scott, right here, along with the full playlist from Friday right here as well. So, Scott is one of our in-person event hosts constantly, of course, but he and Ray also do these virtuals, and they will also be doing another virtual event for us coming up in June. And I wanted to mention that for you, Scott, because this one's going to be option specific. And I think you said that one is the week of the 8th. Here it is. Yeah, June 8th, right?
Correct. Yep.
Great. So this is going to be another one for y'all to check out. So with that, everybody, hopefully if you have not had an opportunity to hit the National Investing Day stuff, please check that stuff out. With that, Scott, let's check out what's happening with our SPX as we get started here this morning. So we're flat to negative by about 0.1%. Not really a move of concern at the open here, Scott. But talk to me about what you see on the chart here as I clean up my draw tool a little bit.
Yeah,
What are you
yeah.
looking at? What are you paying attention to here?
Well, a couple of things, and you already mentioned some of the stuff that we should be paying attention to that could add or subtract impetus through the stock market today. And I love that we're looking at SPX first, a kind of a broader view of the stock market. We're looking at many more stocks here than we would, for example, if we were looking at the Dow. But what I'm noticing, Kevin, just from a technical standpoint, we have had some big momentum, some big moves, a lot of big candles to the upside, a couple of smaller ones, but a lot of big candles candles to the upside and above all three of your simple moving averages. I'm assuming those are 10, 30, and probably a 50 maybe, or maybe a 50 and 200. But either way, we're seeing the stock market through as it's being communicated to us through the SPX here. We've come up and we've hit a bit of a level of resistance. And,
Mhm.
we saw a big candle go up into that level of resistance. And then the last couple of days, so last Friday and then today, we're seeing a smaller candle on today. We definitely saw a smaller candle on Friday. So what this could be telling me is that the investors and traders that are watching this are just waiting to digest more of the geopolitical stuff and a couple of other things that are coming out because it's driving the market pretty big time, Kevin, right now.
It pretty much is. Couple of things that stand out to me, Scott. Number one, not a huge fan of a doji or a candle like this one we got on Friday, where we had a good morning and finished weekly, especially at the end of a range. That doesn't, or a nice rally, that doesn't make me feel all that confident in our immediate ability to continue higher. But that doesn't mean by any means a broken trend. The other area I'm going to keep an eye on is the Taco Tuesday gap zone, taking us back to when we got the ceasefire notification. That's this gap zone here. We tested it twice thereafter and noticed we got the 20-day catching up in here. Scott, it would be totally within reason to see that level once more as a test of support and see if we can validate it and keep moving higher from there.
Yeah, actually, I love that you say within reason. I'll say that when we see levels of support and resistance, that's kind of what we expect. So I expect it to, just from a technical standpoint, to go back and retest that level of support, Kev.
Yeah, and good question here from Jay about the candle from Friday. Is that a shooting star? Yeah, I think that's exactly how you might term that. Commonly we want to find those shooting stars after rallies to the upside. That's what validates it as much as anything else. That candle by itself, in the midst of something like this slop, where we were going sideways, would have far less implication. But because it is at the conclusion, seemingly, of what's been a really strong rally, and let me just put some numbers to that, everybody. Go back to March 30 here. Whoops. Go back to March 30's lows to the highs we made Friday. 15% rally to the upside. So not ideal. And I'll just remind you once more that when we find those things, remember that a doji like this, does it imply immediate reversal? No. Big difference between reversal and what could be a pause. And the truth of the matter is, we came into this with a strong bullish trend. Let's not allow one candle to define what could happen over the coming days here. Allow the market to do that for us. We want price action to dictate it. So, the truth is that doji could just be consolidation, could just be support test. Really, things change under the level here at around 7,075. That's where things might shift. So let's keep an eye on that, at least as it relates to the SPX here near term. As we kick it over to the NASDAQ, we'll see some similar levels working here. Scott, once more, I'm going to clear this up, but I did want to reiterate, so for everybody, so we know, the orange line is our 20-day. The 50-day is down here in purple, and then our 200-day in blue. Scott, we once more have a pretty good distance between price and the 20-day moving average. What could that tell us?
Yeah, I think you could say that without fear of successful contradiction, Kevin. And look at that. I mean, look at that. We get a gap, and then a lot of times what people will say, well, I'll wait for that gap to fill. I'm not hearing that as much as I used to, but gang, obviously that's not a major concern. As you can see, is it gapped up and then it just ran. It just got
Hmm.
above that pink line and just continued to run. And like everything else, and Kevin was cautious about this on the SPX as well. Like everything else, they don't just run unless it's AMD. But even AMD's pulling back. I said that tongue in cheek. That was not a recommendation at all. However, when we see stuff like this happen, we see it go up, we see it breathe, we see it go up, we see it breathe, we see it go up, we see it breathe. And that is a healthy trend for a stock. We're seeing that here with the NDX, we're seeing that with the SPX, etc. Again,
Hmm.
bumping up against a level of resistance after a couple of momentum days. So we'll see if we create more indecision today, or if at some point, somebody decides to make a decision, and if we break one way or the other.
Yep. And the truth is, Scott, the market, I often say the market doesn't move in our time frame, it moves in its own. But the
Oh,
challenge that most of us deal with, I think, as
Yeah.
humans, because we all have similar characteristics and the way our brains work are very consistent. So, one of the things that I think traders deal with is the belief that a rally that's ensuing as we watch it is going to be missed if you don't buy immediately. And that's a challenge. So for me, that's a red flag. When I hear my brain saying things like, "Oh, you're going to miss out if you don't step in here," those are red flags, and I try to temper that excitement a little bit as best I can. The reminder, as Scott gave it to us here, is what goes up will consolidate or pull back. In the midst of a strong uptrend, more often than not, we get sideways, we get price moving sideways that allows time to pass, and that allows our moving averages to catch up with the price action, and then we can thereafter continue our moves. But I would challenge all of us from being too tied to the short term price action and deciding, oh my goodness, I'm missing out on something. Because odds are, if we adhere to our price levels, Scott, we'll do a lot better if we're not acting hastily and emotionally.
One of the important things that traders will learn if they are going to have any kind of longevity in the market trading.
It's one of the hardest things to gather too,
It is.
as a trader, that's for sure. All right, so there's our large caps, so our S&P 500 and our Nasdaq 100. Let's look at our small caps here, Scott.
Okay.
Looks again a similar chart pattern, although a little bit more casual in its action, especially of late. So in the last, what I'm noting here in the last 2 weeks, Scott, is we've seen this range break, but this looks so different because the Russell range bound and broke on Friday to the upside, whereas everything else, the S&P and the Nasdaq, were much more expedient moves to the upside. Could this consolidation be leading the small caps to more highs?
It could be, but the consolidation itself, Kevin, is not what's going to be leading them to highs. It's in large part also tied to some of our external forces, right?
Hmm.
When we look at the Russell, for example, again, small cap, and these guys in the small cap have more sensitivity to interest rates than large cap companies do. And we have some uncertainty. Actually, I think there may be some certainty brewing, but nonetheless, it hasn't. Until all things come to fruition in the interest rate market, there's going to be some uncertainty there. And as long as there's uncertainty there, we could see kind of this kind of activity within the Russell.
So what's confusing to me, Scott, is if the Russell is so tied to interest rates and interest rates are rising because evidently, at least as it relates to the 10-year here, notice the 10-year is up about almost one, well, 3/4%. We're at 4.41 here on the 10-year yield. That tells us that traders, Scott, are selling U.S. Treasuries at the 10-year level. So if they're selling Treasury bonds and yields are rising, how is the Russell digesting this so positively? It's a little bit of a shock to me.
Yeah, and I agree with that for that exact reason. It's a bit
Yeah,
of a shock for me too. There's obviously some optimism, and I don't know if the optimism has, kind of caught its own bid. Maybe optimism caught a bid here.
sure.
And we see that, but so much of this is emotional, so much of it is psychological, and we may be seeing some of those factors at play here. In fact, I would
Mhm.
argue that we are.
So before we move on, I want to mention we did see a link for a survey in the chat. We always appreciate your feedback and input, everybody. If you'd click that link, it'll open a browser window for you right next to this one, and then you can get to this post class. You don't have to worry about it right now. It takes all of 60 seconds to let us know your thoughts. If you want to make some comments, you're welcome to, but we always appreciate hearing from you, everybody. We're going to quickly hit up the semiconductors and transports, and then we'll keep moving on here. Now, Scott, the semis have just been on an absolute tear, and I mean silliness to the upside. This move was 50% to today's peak, or just over 50. Scott, I mean, we cannot anticipate this level of enthusiasm and exuberance to perpetuate, right? But I mean, the levels that we're looking at, we're talking about a 10% drop just to find the 20-day moving average here, Scott.
Yeah. And and what can happen in situations like this? The market doesn't care if you think it's irrational. right?
That's true.
It's going to do what it's going to do. The market's not going to respond what I think is should be doing or shouldn't be doing, or
Hmm.
just me, but all the rest of us. But we are seeing some kind of unusual activity. Kevin, you mentioned it. Look how far away it is from that 20-day moving average. That tells me something. So I am watching in situations like this. I'm still watching levels of support and resistance, but I'm really paying more attention to the size of the candles and what
Hmm.
those candles look like at levels. You mentioned it earlier, at levels of support and resistance during this rally.
So, a couple of things for those of you maybe playing this space broadly. The 20-day for a lot is probably going to be too much of a swing for a comfortable area under which to have an exit strategy. So, you might need something a little faster. The 10-day is definitely caught up. Notice we've been above the 10-day, everyone, back to April 1. So, basically, you got the entire month of April running the 10-day as support. So, a close under the 10-day would be a significant development. And some traders would use weakness like that as a means of selling some of their longs in the semis. Doesn't mean that that is a reversal indication. It could, like I said previously, just be a pause to the trend. But a close under the 10-day would be different than we've seen for the last 4+ weeks. And that could be a reason for traders to take some off. So something to monitor there on the semis.
And
Now,
Kevin, if they
go
didn't
ahead.
take some off, it might be okay to go ahead and move a stop loss
There
for,
you go. Yeah.
or maybe start to scale out, or or
Sure.
what those things are. I mean, when we see that, that's not like, oh my gosh, hit the eject button. It's just a yellow flashing sign that says, hey, pay attention right here and make some decisions.
So true, Scott. Again, this comes back to the trader having a level of comfort with price action and then using the price action to define the steps they will take. So we talk all the time in many of the classes I host about whether you're a seller on weakness or a seller into strength. That is a different approach entirely. Not every trader is going to say, yeah, I'm comfortable giving up 5% to the downside and then selling. Some traders are going to say, nah, no, thank you. I'm going to sell a little now. And then if it does pull back, I'll sell a little more. But have that plan. Know how it is you want to approach it. Now, Scott, we're going to look at the transports here. There's been a big unwind for a couple of reasons. One, of course, we've seen oil continue. We're going to look at oil momentarily. But we also know that Avis resides in this space, broadly speaking. They had that ridiculous rally to the upside on the short squeeze. I think that kind of, even though it makes up a small component of this space, it probably had a play in this enormous rally to the upside. So is there anything beyond oil we should really be watching as it relates to the transports, do you think, Scott?
Um, well, I mean, there may be, but oil is definitely the big one. Definitely the big one. I mean, that's
Yeah.
I opened up the Wall Street Journal, I opened up Barron's, I opened up Market Watch this morning, among other things, and top of game, or near the top of game in all of these market commentaries is oil. So we're
Yep.
definitely still being affected by that.
Well, then there's probably no point in delaying the inevitable. Let's see how oil's doing here. I'm pretty sure we've got oil elevated today. We've been watching a bounce take place, and that bounce really came from the 50-day back here. Now, I mean, this is a choppy chart, Scott. It is really hard to get true trend here without backing it out. I'm going to push this into the weekly chart and then zoom in a little bit. Scott, to me, I've got a lot of, just individual lines here and there, but all I see is volatility here. What am I supposed to take from this?
Well, and why are you seeing volatility? People may ask, well, where's Kevin seeing volatility? I don't get it. Look at the size of those candles.
Yeah.
One of the things that I say when we're teaching this live in person, like in Boston or wherever we've been recently, is you're just looking for the story. And the story that's being told right here is a story of back and forth big time. I mean, look at that. So right, that first candle going left to right, that first big green candle that breaks that gray line. When you
Yep.
see that, dude, that guy is what we call a momentum candle. How do we know
Hmm.
it's a momentum candle? Because it's big. How do we know it's big? Because it looks big. Look at look at it compared to the other days on the chart, and it's
Oh, yeah.
huge. And then the next day, look at that. The movement on that next day was huge. Indecision clear to the top. The Bulls pushed it clear up there. The Bears pushed it clear down there. And that tug of war ended in basically a tie that day. Look at that. And I'm not going to go through each one of those, but you can see the size matters on these candles. Look how big they are. Look how small they are. Look at the different stories that it's telling us. Now, Kevin, would you do me a favor? Go
Yeah,
back out to the 1 day chart.
you got it.
Because now this is something that's really interesting to me because right at that level of about 96, there is a level of support. You can see, yep, right in that area, there is a level of support. And you can see on that level of support, that very last candle that we have, or is that today's candle? Is that
This is
today?
today's.
Okay, so today's candle is looking so far like it could be a hammer, an inverted hammer at a level of support. Now we would look for that if that's the case to bounce, and so bounces and breaks, we'd see that potentially bounce. How high could it go? We could potentially see it go to like 115. That would be a potential target. Here's the problem. We have so much volatility, not just in the price chart, but the volatility that's being reflected in the price chart is actually reflective of the volatility
Hmm.
in the Strait of Hormuz, and a bunch of other things is creating this. So it's not just price action. This is being affected by geopolitical.
Yeah, and not just geopolitical headline risk, right? I mean, we're going to get one headline from one place, another headline from a different place. And the hardest part right now, I think, Scott, is that traders are struggling to know which who to believe, right? I mean, because they're getting contradictory headlines on a frequent basis. It's a lack of clarity once more that is probably, as much as anything, leading to the volatility here.
You're so right, Kevin. And traders and investors, we can digest news. We can digest good news. We
Yes.
can digest news that may not be great news, even a little bit of bad news. We can digest that. What we can't digest is uncertainty.
Yeah. And uncertainty leads to poor decision making and struggles in finding the true trend. It is to say it's difficult is an understatement, I would suggest. I do think the thing that traders are maybe worried about a little bit is the time to get us back to some semblance of normal, because this is the biggest issue, isn't it, Scott? That we got what ends up happening is the companies end up taking production offline and then having to restart production, which takes longer time as well. So
And
this is a lengthy process that most traders and investors don't really think about.
well, and to restart production, I mean,
Yeah,
that's expensive. It's
yeah,
expensive to
yeah.
restart production. I mean, and those costs will hit the bottom line. And do investors and traders care about the bottom line? Well, we should, because that's kind of what drives the price of the stock, right?
It's
So,
true. So, a couple of things here, everybody. First of all, know that we're looking at the symbol for futures. We're not encouraging you to trade futures in any way. We use this as a means of understanding price and the relationship between oil and the broader market. So, please keep that in mind. Number two, just because we talk about oil doesn't mean you need to trade oil by any stretch, of course, but it is important, I think, that we traders watch it and understand what's happening there, because if we don't ignore it, if we ignore it, then we leave ourselves open to greater risk, perhaps. And if you think about it, and you're watching oil and you're paying close attention, the truth of the matter is higher oil as it relates to the broader markets is going to be a headwind for us. We cannot likely sustain elevated oil over that $100 a barrel level for an extended period without seeing the market take a negative reaction to that. So we haven't yet witnessed a whole lot of negativity outside of the volatility we got in March before April led to the massive rally we saw. But I do want to encourage everybody just to keep an eye on oil and watch the way the market reacts to the moves that we get in oil. Okay, Scott, let's talk about, since we just finished on oil, let's move into energy. So, from a collective view, one of the things that stood out to me was this rally and hold of the 50-day moving average now, Scott. This is starting to take a little bit of a bullish turn here.
do you mean bearish turn?
I mean bullish because here's why. Mainly because we saw support held here,
Yep.
which happens to coincide. And I'm going to go back to the beginning of the year. So, January 2's low. Check this out. We rallied, made a huge move, pulled back, held the 50% retracement, and now we're sitting above the 50-day moving moving average for 4 days. So
Yeah.
some traders might call that a bit of a maybe confirmatory hold of support, possibly. But if you're feeling the opposite, I definitely want to hear that.
I'm not feeling the opposite. I wanted to hear your explanation around that, and that's pretty helpful right there. A lot of times when it comes to technical analysis, we'll say look left to confirm right, and that's what you've done here. You see that old resistance back in February,
Yep.
that old resistance right there is now acting as a level of support, kind of textbook when we see this stuff happening. And so what you have seen is it has come off of a previous level of support, gone up through a previous level of resistance, and that level of resistance is now acting as support. But there we've got some pretty interesting candles, Kevin. We've got a couple of big green candles. Those two candles are showing me some momentum. We've got
Hmm.
a spinning top, and then we have a hammer, what's looking to be like a doji or a hammer at on today's price action. So with all of that in mind, a technician in the market may expect a bounce off of that level of support. It's showing support on a couple of your moving average lines as well as the horizontal support that you've drawn in there. Again, looking left to confirm right.
Hmm.
Kev, just based on a technical analysis, we would expect this to bounce and go up. Again, this is being affected by a lot of the headline stuff, a lot of stuff in the
True.
news, and so that will lend sway to our decision making as well. But
Hmm.
that's kind of what we see happening right now on that level of support.
Yeah, one other takeaway here, Scott, might be for the trader who's looking to participate in a potential swing is
Yeah.
that if you're the trader looking in this 20-day, 50-day period, as many do for swing trades, one of the benefits to where we reside right now is simply risk versus reward is favorable. Here's what I mean by that. If a trader were to believe in investing in the energy space right now would be good for them, the place where they might change that would be really low from where we are, really close to where we are. Your entry might be 897 right now, but down 20 points down to 877, you break the 20-day moving average, they may choose to move on. So you're risking about maybe 20 points to the downside for what could be about 75 to the upside. And again, this is a concept of just, am I risking a proper amount for the amount of opportunity I have? And this is one of those scenarios where the trader could say, yeah, I can justify it simply because if I'm using the 20-day for exits to the downside and I believe we can go back to the last high, well, then you're maybe risking about $1 to make three. And that's a range of risk versus reward that a lot of traders will look for. Doesn't mean this has to work in their favor, of course, but what it does mean is if you step in here and you're wrong, you can limit your losses to a comfortable amount. That's one of the ways that traders might look at this. So I thought this was a pretty insightful and instructive chart, especially in a space, Scott, we just can't get away from. We have to keep an eye on energy. We've had a fantastic year. This space, even right now, year to date, 31% almost, even after a pretty healthy pullback. So, pretty great move in energy. Scott, let's move on down the line here. Looking at some of these other areas today, leadership is coming from discretionary. We had a bull flag break here, Scott. Check this out. Big
Yeah.
move to the upside. And then last week, a huge hammer candle that came right at support. The lows of the week there, or the low of the week happened to be on Thursday, finished with a beautiful hammer. It's red because we closed below the open that day, but ultimately it's held the breakout now.
Yeah, and it was an up day.
Yeah.
Was an up day. A lot of times those red candles can be confusing if we don't understand that, but that was an up day. And then we had two more up days, kind of a little indecision. Today's up day is showing more conviction, but we'll see. And again, we're not going to anticipate what will happen at the end of the day or by the end of the day, but it is so far showing some more conviction. I love that you pointed out the bull flag. What one would potentially do is take that flagpole, place it on the bottom support line of the flag part of it, and then the upper region of that flagpole now would potentially become a target. And so, I realize that we're looking at an entire sector here, a little bit more difficult potentially to predict those targets on entire sectors than it is on individual companies, et cetera. But nonetheless, it's a pretty bullish move with some pretty bullish signals coming out, Kev.
Yeah, it's a good look. Now we often say there's a difference between bull flags in uptrends and bull flags in downtrends. One positive you can take from this one, at least, even though we do have some resistance above us, is that you're above all three of these major moving averages, the 20, the 50, and the 200. And now you're 3 days outside of the cloth portion of the flag, and that's something that a lot of traders would look to as validation of the breakout. So you do have, 3 days outside of the flag. That could be confirmation for some of you. Some of you might have been enthused with the break on Thursday and thought of it as the opportunity. So as always, define confirmation for yourself. Those of you who are here frequently know that I call that the Horner rule. Understand confirmation, know what it is for you that's going to be the impetus to place your trade. For some traders, it's one day outside of a range or to a new high or something like that. Other traders want to see that over multiple days, 2 in a row, 3 in a row, etc. So have a defined view on that and stick with it as best we can. Okay, Scott, another thing that's confusing to me today. Check this out. Again, yields are rising. Why are utilities keep moving? This is a little bit under consolidation here after having moved back to the top portion of the range, but utilities, I would have expected again, with an elevation to yields, utilities to struggle, excuse me. So I'm starting to again wonder, Scott, and this is getting into more of a narrative discussion perhaps, but if utilities are doing well in the face of rising yields, small caps are doing well in the face of rising yields. Is the market telling us that they expect yields to just naturally, organically come down, maybe with the shift in the Fed chair that we expect here in the near term?
You know, what we're seeing here is we're seeing kind of a defensive rotation just kind of quietly happening, right? I mean, you see the market slightly going risk off due to geopolitical stuff, due to the oil spikes, due to those kinds of things. And, so we start to see because of that, and I think that that's what's causing the differentiation, Kevin, is we're seeing a pull into, even with yields rising, we see a pull into stability. We see a lot of investors and traders moving into various areas of stability. So, yield level versus yield direction. I mean, we got to take that into consideration as well. We do see the rates rising modestly, but they're not spiking, not aggressively, not yet, and maybe never will, but they're not yet. And if the 10-year moves, say, from 430 from 430 to 440 today, we're not going to see that as disruptive.
Yeah.
People are going to get a little bit nervous about it, and it's going to cause a little bit of, dust flying around, but it's not disruptive.
Well, okay, so you're probably right about that, right? I mean, big moves are disruptive. When you move through big levels, they become even more disruptive. Maybe I'm just overthinking this in the near term, but I'm a little bit surprised by this, along with real estate, which broke out of a range here. Look at this. I mean, this is also bull flag with seemingly, if I'm not mistaken, okay, we've got a big level of resistance above us. So this is significant on real estate. But again, Scott, you'd expect these to be moving up if yields were dwindling. Traders would be looking towards real estate, REITs, for example. Again, we're not recommending REITs as a strategy or anything, but this is a group that you would expect to do well if yields were expected to drop.
Yeah, yeah. I wonder how much of this, Kevin, has to do with these sectors being and becoming more closely tied, for example, to AI. Uh,
Sure.
I know utilities are getting a lot of support from stable cash flow right now, especially when we're just slightly uncertain in the market, right? And more importantly, though, now we're tied to the AI data center, and we're seeing that power demand that power demand create or influence the entire story around us. So, Kev, I think it's really less about rates, more about where the capital's rotating into.
Okay, well, that seems like as good an example, as an explanation as we're going to get. We'll see if this continues or persists, but I wanted to make sure we touched on those. It is looking a little bit defensive, just a smidge defensive broadly here. We got the Dow Industrials dropping about 0.5%. The SPX kind of still hanging in there, but we just keeping an eye on the transports, continuing to get a little bit weak. Now, granted, the transports are hanging out in an area of support. We'll be watching that for you the remainder of this week. Scott, I think we should spend our final 10 minutes or so, maybe looking at some stocks in the news this morning. We had some upgrades and some stocks Amazon got upgraded. I wanted to talk about it, but there's something going on here. So Amazon, I believe, is in bid for eBay. But this morning we saw GameStop come into the mix and suggest that they would like to participate in this. So first of all, Amazon has been upgraded to buy from neutral at Fubon with a target at 320, so that'd be a $50 premium, never a guarantee to be achieved. But I also thought, hey, look at this. eBay got a nice little lift as a result. So hearing that there might be some back and forth, a little bit of a fight for acquisition of eBay between GameStop and Amazon now has led eBay to a little pop to the upside. Those are new highs. Let's see. I was looking for something beyond that headline. Okay, let's also point out what GME is doing here, gang. So GME off about the equivalent of the eBay pop based on this headline. So heads up there. And then I also had an upgrade. Boy, did I have a slew of upgrades today. Scott, how about Airbnb? Airbnb, there we go. So Airbnb was upgraded twice. We have it at upgraded Oppenheimer to outperform due to organic revenue levers materializing, excuse me, and also upgraded to outperform with a 180 price target. So, Scott, this chart looks a little choppy, right? It's a little messy. But if I backed it out, it might look a little clearer. What are your thoughts on what you see here?
Yeah, I wouldn't call, I mean, it is a little messy, but that doesn't concern me with this chart because, if you zoomed in just in the last month or two,
Yeah.
on that chart, it's way less messy and we can see some pretty obvious patterns. I see two bull flags on the way up there, Kevin, that have kind of added, and we often see those bull flags moving as we are in an upward direction. You're
Hmm.
the most recent one there. I love that. And look where it's happening. Look what we're getting a bounce off of now. Old resistance, new support, right? And then going back all the way, I can't see the bottom, but back where be on the earnings call, right? Earnings call before today, right there, we see another bull
Yep.
flag that happened. It didn't kind of hold out the way that we often see bull flags do, but ultimately it did get to where we wanted it to go. So, I mean, gang, we're seeing some good stuff right here, Kev. We'll again have to kind of wait and see how it ends through the rest of the day, but that's a good looking. You said it's a messy chart, but a lot of traders and investors would like the way that chart looks
Well,
today.
you know what happens, Scott, is I look around and I'm always noting these tails, right? The tails on an
Yeah.
individual day basis tell us quite a bit. And when I say messy, it's messy in the sense that, yeah, we tried a number of times to get through this 134 level just in this window here in early March when we were dealing with all the negatives associated with the geopolitical situation, right? So early March, you saw we were struggling to get through 134, 135, but then once we did get through it, it was straight up. And then we get a little bit of a breather here. So this is all structurally okay, but you're right. It does look better than I maybe gave it. I might have given it short shrift. Is essentially what I'm saying here,
Well,
Scott.
and Kevin, let me just throw this in there. You
Please.
weren't wrong. You just didn't see it the way I saw it. And if that's the
Yeah,
case, I shouldn't try to see things the way you see things just for the sake of seeing things the way you see things.
that's
Even though
right.
you're a wonderful trader, even though you're a wonderful educator and all those other things, I should develop my own because you taught me so well, and hopefully that's what we're providing here for our listeners. But it's okay. We're not all going to see it the exact same way. Once it's pointed out, sometimes that can help, and sometimes you'll agree, and sometimes you'll still disagree, and that's okay.
That's exactly the takeaway. I feel the same, Scott. No, and besides, our viewers want to hear a little bit of back and forth anyway. It'd be no more, not any nearly as much fun if you and I are just agreeing on everything. That's
They
far
came to the
less
right
exciting.
place. If they came to the right place, if they're looking for disagreements between two people.
Well, that's true. One thing is for sure, Scott's going to give me the other side of the story no matter what. All right, Scott, one more for you here. How about the trade desk? Trade desk got upgraded today. This is significant because the stock has been in a downtrend for a while, everybody. Let me give you a little extra time here. This is a 2-year daily chart. There's your peak. So right around 142. Whoops, I'm going to put a line on that. So 142, we're hanging out at 24, 25. Not a great chart, Scott. So they're off from the peak about 82% or so. They were upgraded, however, at Wedbush to neutral on both World Cup and political tailwinds. They put a target on this at 23, so they're already above that. But the firm, Wedbush, that is, thinks that heightened competitive landscape and narrative pressure should be offset by spending tailwinds tied to the World Cup this summer and likely upside on political spending in the back half. Now, what I find interesting about this, Scott, we rarely get an upgrade in the midst of an ugly chart like this. Commonly, these analysts wait for the trend to shift and then they give you their upgrade. So this is a little bit ahead of the game. Do you like the technical conditions here from a standpoint of seeing that we've continued to make higher highs and higher lows as it relates to the RSI, even though price hasn't moved yet?
Yeah, I do like what we're seeing there with RSI. Thank you for zooming in on that, Kevin. In fact, can you zoom in just a little more, say
Sure.
from earnings date? There you go, even better. That helps me to kind of see what's really happening there. I'm glad that you showed us all that stuff in the past. It's really important to understand the trend, and it's really important that we understand we shouldn't trade against the trend. The trend is our friend, and all those other things that you've heard. We get that. We get that. But trends reverse. I'm not predicting that this trend is reversing. I'm just saying trends do reverse. When we see that happen, sometimes it's good to get in as they start moving up. That would be, like Kevin mentioned earlier, like a swing trade type of scenario. But
Mhm.
Kevin, we have some things happening here with the RSI that are positive, but I'm not seeing a whole lot of bullish indicators yet on the other, for example, the moving averages and just the price action itself. We have established a level of support that we are currently trading above right now, but we're just going to have to see if it can break down through that white line that you drew. That white
Yeah.
line, I know what that is, but that white line could actually act as a level of resistance. And if we were to break through that white line with some conviction, that might be the confirmation that you were talking about a few minutes ago when traders decide to get in or out.
Yeah, and I'm going to actually give you one other piece to bear in mind here, everybody. Check this out. There is a gap level here, and that's basically what we've rallied into, that
Yeah.
little gap. And it is little. It's a and not all that important gap. And what I mean is it's not tied to anything other than just broad market movement, I wouldn't think, meaning it's not an earnings detail here. And again, earnings are coming up. But we've rallied basically right into that level. And so what are we looking at? From 20 up to 24 and a half. So you've added 4 points. That's a solid 20% move to the upside. So, good move there. But through the white line, this new one certainly changes things a little bit. You'd like to see some higher highs. You don't have that yet. You got a lot of work to do to create a higher high. This will be basically that level here. That's at 33. So you are taking some. If you buy here, you're basically leaning into what the analyst has to say more than anything else. You don't have a technical reason, according to the chart right now, Scott, to be a real believer in what you're seeing out of the trade desk here.
Correct. In fact, you have a technical reason to potentially pause, and that
Sure.
technical reason to potentially pause is that red phone dot above that blue light bulb dot. That's an earnings call coming up soon as well, and that can definitely throw a wrench in things, or
Yep.
or a rocket ship, depending.
Or a rocket ship. Take your pick. Okay, two last ones, and then we're not going to analyze, but I wanted to make sure I gave you these, everybody. Alphabet was downgraded today at Freedom Broker to hold from buy. This is a gutsy downgrade after an extensive move. So heads up here, you might be watching a bit of a pause. They did put a target at 400 up from 365, even though they downgraded the stock to hold from buy. And then AMD also got a downgrade today. AMD was downgraded to hold from buy at HSBC and a target at 340, which is up from 335. Not an ideal candle, but Scott, this has been fun. Always love getting to speak with you, but I have not had the opportunity to host with you in a long time. So I am so glad to have you back. Thanks for being here. Thanks for sharing your thoughts and insights with our viewers.
Thank you, Kevin. Thanks, everybody. Good to always be with you. Make sure you come see us in a city near you when we're there with our virtual or with our live workshops.
Yeah, we would love that. Check the calendar for all that we got going for you, everybody, both in the way of virtual as well as in-person events. Follow us on X. Big thanks to Brent in the chat today. And don't forget, we have that survey link that he's reposted. We would love to hear from you. We value your input. Thanks for being here, everybody. Have a great rest of your Monday. Look forward to catching up with you again real soon.